Hey people, how are you? It's me, Makeda Valletta again. This time I'm live on my IG page, my backup page. Hopefully you guys can hear me this time and the sound won't cut out. I just did a talk earlier and people couldn't hear me, so I had to record it on I had to record it separately. But I just wanted to do another quick video before I lose my light. So some of you, let me first introduce myself because some of you don't know me, because I'm doing this on my IG. I will save it and then repost it to my YouTube page, The Renaissance Amazon. So if you're on my YouTube and don't follow me on IG, be sure to follow me there. And if you're on IG, you don't follow me on YouTube, be sure to follow me there. Quick intro for those of you who don't know me. I am a nutritionist, a trainer, sacred sexual educator, a holistic health educator and practitioner, okay? And I'm just all about all the things that's necessary to keep us at our healthiest and highest performing level, right? And for my past couple of videos, I've been talking about credit and credit cards, and I just wanted to do a quick educational video for people who may be new to this or may not really understand. If you're getting started on your credit journey, or sometimes people there's things that they just don't know. So I'm just going to give out some, brief information that you should know, because, when it comes to your credit, what you don't know can hurt you. Same thing is true with your health. What you don't know can hurt you. Another thing is, when it comes to fitness in your body, there's something called progressive overload. As you master one thing and you get a little bit stronger, then you add on another skill and you add on another skill. And that's called progressive overload. The more that you can do, the more that you're given, right? But you have to start somewhere. So, one of the quick mistakes that I see people make when it comes to credit is where they check their credit score, right? And we have 3 different credit scores. There's 3 different credit bureaus. There's Experian. We have more than 3 credit scores, but there's 3 main credit bureaus for our personal credit. And that's Experian, TransUnion, and Equifax, right? And different banks and different credit card companies or lenders pull from different credit bureaus. So if you're going to get a car or get a certain credit card or whatever, you always want to find out what bureau they're going to pull from first, because your credit score is not always the same in all of the bureaus. There's also something called, the FICO 8 score, which is the most important model to look at, right? But, which is what most lenders and credit card companies and stuff look at, is your FICO 8 score. But there's also a Vantage score, which is a different scoring model. And that's what you get when you check Credit Karma. A lot of people check their credit on Credit Karma. You don't want to do that, because Credit Karma has a Vantage score, which is not accurate at all. Okay, so where you're checking your credit score really matters. The same thing is true for like a lot of banks now. They'll tell you that they'll give you a free credit score, and that credit score that they give you also is a Vantage score. It's not accurate. You want to look for FICO 8 scoring models, okay? And it's important to look at all 3 bureaus. So some place like Credit Karma, not accurate. Where you want to check your credit score, myfico.com, which is my favorite, Experian.com, which is probably maybe my second favorite. There's also my Score IQ and Identity IQ, right? But I'd like my FICO and Experian the best, but my Score IQ and Identity IQ are also good. But you don't want to use Credit Karma. You don't want to use Credit Wise, and like the credit scores that come with your bank accounts. You'll notice they're different. Another thing is you can add utility bills and your rent to your credit report. To your credit profile. So there's something called Experian Boost, where people add their gas bill, their electric bill, maybe their Netflix, their phone bill, and it can help boost your profile if you have a thin profile. If you have a thick profile, you probably don't need it. I've heard conflicting things about using Experian Boost. I've heard people who don't think it's a good idea. They think it could work against you. I can say for me, I think it helped me. And I think with the credit stuff, there's a lot of different theories. And that's why I listen to a lot of different people. And then I start to see that a lot of people don't really know, with certain things. But some people don't like Experian Boost because they're like, you're giving these credit agencies too much of your information. but I'm just letting you know that exists. And also there's something called rent reporters, where if you're paying rent, you can have that reported onto your credit as well, right? Because somebody who pays a mortgage, that's a part of, their credit profile, but you don't have to put that on there. And people have conflicting opinions, so you can look more into that on your own and see if that's something that you want to do. But that only goes on like your Experian, the Experian Boost. Then you have, so there's different factors that make up your credit score, okay? And with the FICO credit score, it's credit mix, okay? The mix of credit that you have, that's 10%. So you have installment and revolving lines of credit. So installment loans would be like, the car loans and mortgages and stuff like that. And then you have like credit cards and things like that. So the credit mix is 10%. If somebody doesn't have, you don't want to go into debt trying to build your credit profile. So if you don't have a mortgage or you don't have a car, don't go getting a mortgage or a car to build up your profile. You don't want to do that. But what may be helpful is just to get more top tier credit cards to help build your profile. Then you have length of credit history, which is 15% of your credit score. So having a very short history, I think less than 2 years is really, I think less than 10 years is really considered short, but less than 2 years especially. But the more years you have on on your credit profile, the better it's going to be for you, right? So that's the length of your credit history. And the length of the credit history also changes when you get new credit. So whenever a new credit card or new credit is added to your profile, it shortens the length of your credit history because it's like an average of everything. So it can be shortened every time you add something new. It shortens it, okay? So keep that in mind. And so that's why sometimes the credit score can drop. When you understand the different components of what makes up your credit score, then you can kind of see like what makes it drop and how you can get it higher, right? So that length. One way that people add length, if they don't have it, is by adding authorized users. Now, I'm doing a very brief conversation because there's a lot to know. When you add authorized users, you want to make sure it's the right person, that person's responsible, that person has a good credit history, that they're keeping the utilization down, But authorized users can add history to, length of history to your profile. It can also help to give you a relationship, with certain organizations. And whereas like years down the line, you want to get a card with them, they have your information. It's not a guarantee, but it can help, right? So, but authorized users, and people pull your profile, they see that, and depending on who you are, what you're trying to do, that may or may not help you so much. What you have, your primaries, your own accounts matter the most, okay? Now, again, I'm doing a brief video on this. This is something that somebody could talk about for hours, and it depends on your personal situation. Everything kind of varies, right? Then you have, and this is also why with the average length of credit history, why you don't want to close credit cards. So if somebody has like low tier credit cards from the past, like store cards, you don't want to get store cards. You do not want to get Macy's cards, Bloomingdale's cards. Do not get store credit cards. Those are low tier cards. They don't look good on your profile. They don't offer you that much value. Okay, you get way more value out of using top tier cards, or medium to high tier cards. But if you have those cards, you don't want to close them out, okay? You just don't use them and use them 50 cents a month just to keep it open. Because if you don't use cards at all, the company may close it. But you don't want to close them because it's adding to your credit history and length and your overall available credit, right? Having the overall available credit that you have also affects your profile, your score. So then, payment history, which is 35%. Okay, that's a huge percent, 35% payment history, which is why one late payment on your credit profile can really drop your score. And not only that, even if somebody has a good credit score, but they have one late payment, they can be denied for a lot of things. One late payment is a big deal. Like one concussion is a big deal. And then every subsequent late payment after that, big deal. Okay, so you don't want to get those late payments. But times that people do get stuff like that, it can be removed from your profile, all right? There's people who do that type of stuff. But you'd rather just don't get it, okay? But sometimes life happens, I'm just saying. Prevention, just like with your health, prevention is always best. When people have when stuff goes into collections, if something goes into collections, you never want to pay it off if it goes into collections, because if it goes into collections, that means the insurance has paid that company, so they got their money, and you paying it, you don't need to do that, okay? You don't want to do that. Look more into it. There are a lot of credit experts who will tell you that. You can get derogatories removed from your credit profile as well. I don't do that work, but I know people who do. And, because with your credit profile, anything that is not verifiable and 100% correct can be removed from your credit profiles. Okay. And it has to be consistent across all 3 credit bureaus. So if your name is misspelled, if the dates don't match up between all 3 credit bureaus, if your address is a little bit wrong, those things can be removed. Okay. And I do know somebody who does really good work with that. So if you are interested in that, that type of service, you can let me know and I'll give you their information. But you definitely, it's about the score, but it's also about the profile, okay? So then amounts owed is 30% of your credit score, okay? Amounts owed. So that's really about your utilization, okay? What percentage of your and I'll talk about that in another video. What percentage of your credit are you using, of your total available credit are you using? Ideally, you want to keep it under 10%. At the very least, the next bracket would be under 30%. That's the ideal thing, right? But really under 10, if you can keep it between 0 and 2, 1 and 3 is even better, right? But your scores will fluctuate with the utilization. And you can also increase your available credit if you get a credit card like the Apple card is not a great card. It's good if you're new to credit and you're building your credit profile. It's a decent card. And the one thing about it is that they do give credit limit increases pretty easily. And so credit limit increases is like, let's say you get an Apple card and they give you $2,000 limit, and then you use it for 3 months, you're responsible with it, and then 3 months later you ask them for a credit limit increase. Maybe they increase it to $6,000, okay? I'm just giving a number. Now you have more available credit. When you have more available credit, that also helps your credit score as well. And then new credit is 10% of your score. So this is the reason why, like, every time you get a new card or something new added to your profile, your credit score will drop. Now, how much it drops depends on how long, how thick your profile is, how long the length of your credit history. That makes a difference in terms of how much it drops. Okay. And so those are the important things. And there are plenty of videos on YouTube where people get really into depth about understanding the aspects of the FICO score, but that's just a brief explanation of it. The thing is, when it comes to credit cards, like I've talked about in some two previous videos about them a bit, is that you don't want to be too frequent. Now, different institutions have different rules about frequency, right? But in general, you don't want to be too frequent because it makes you look thirsty and hungry, and they don't like that. Banks, institutions don't like that. If you look like you've been applying for too many things, they like you when you look like you don't need it, not when you do. So if you apply for something and they see you applied for 3 cars in the past month, it's like, why is this person trying so hard to get, so you have to be strategic and keep it at a minimum, right? And not just applying for new credit, but even with the credit limit increases, some institutions give you a hard inquiry. So there's the difference between hard inquiries and soft inquiries on your credit report. A soft inquiry is when, like, if I check my credit score right now, it's not going to show up as an inquiry on my report. That's a soft inquiry, where there's nothing on the report. A hard inquiry means that it shows up on your credit report, and you get points deducted for that, and it affects your credit score for a year, but it stays on your report for 2 years, okay, where it can be seen. And if you have too many inquiries, that can count against you too. Okay, a lot of institutions don't like to see too many inquiries, Chase being one of them for sure, okay? It's really important to be, when it comes to the credit cards, to mess with the 4 main banks that matter, okay? And that's Chase, institutions, okay? That's Chase, that's Amex, that's Citibank, and that is Capital One. And Capital One's on the bottom of that, okay? And Amex is not a bank, as we know, but they might be on their way because they just opened up. Now they have business and personal checking accounts. But those major institutions, okay, are really important. The Bank of Americas and the Wells Fargos are good, but in terms of, what you're going to get out of credit cards, you want to deal with those 4 institutions. Now, which banks are good kind of depends on what you're doing. Okay, I understand that Bank of America is really good for auto loans and stuff like that. A lot of people love Navy Federal. Navy Federal is like not a low tier card, but maybe mid to low tier. I'm sorry, that loud sound. But Navy Federal can be good for people who are in the beginning stages because they give high credit limits. And again, that total available credit helps your credit score a lot, right? But Navy Federal, their products that they offer is not top tier. So it's like, it just kind of depends on your profile, what you're trying to do, and where you are in your credit journey. All right, what makes sense for you. But you want to be really careful and cautious about what you apply for and when. That's the main thing. You never want to, and hard inquiries can be removed from your profile, but you never want to remove a hard inquiry if it's connected to an open account. So if you applied to get a credit card at Bank of America and they gave it to you, you don't want to remove the hard inquiry because then it'll remove that whole entire card from your profile. But if you apply for something and you don't get it, then those hard inquiries can be removed. And also, never apply for credit cards that from like mail offers. Like you got something in the mail and it's telling you to apply, and it says you're pre-approved. There's no such thing as a pre-approval, first of all. And a lot of times when you get those things in the mail, it's coming from a third-party company, not even the credit card company, that's trying to get you to do that. And you lock yourself out of bonuses for a lifetime. A lot of times when you get, especially premium credit cards, there's sign-up bonuses that are very valuable. But when you do it through that mail stuff, a lot of times you lock yourself out of that for life, okay? So you never want to respond to that stuff that comes in the mail. And you want to understand, like, if you're going to get a credit card, why you have it, what it's for, like the uses of it, because every card is different. Definitely not mess with the store cards, though, okay? Also, so I told you never want to delete a card from your profile. You never want to upgrade a card, okay? So if you have a particular card, let's say a lower level Amex card, like the Amex Green or something, and you're like, I want to upgrade to the Amex Gold, personal gold. You don't want to do that because when you get the Amex Gold card, it comes with a sign-up bonus. When you upgrade from one card to another, you also forfeit the sign-up bonus. So you never want to upgrade a card. You just want to straight out apply for that new card. And the good thing about the Amex ecosystem is that once you have one Amex card and you're in the Amex family, after 30 days, whatever else you apply for, there's no hard inquiries on your credit report, right? So understanding this hard inquiry thing, looking at your profile, seeing what's on it, seeing do you have any delinquencies or things that need to be removed. But they can be removed, okay? And it's in your best interest to have a strong credit profile. If you have a mortgage or car loans that you pay off, a lot of times your credit score will drop, and sometimes significantly, and people think that it should help them because I just paid off this huge debt. But a lot of times it makes your score drop. Now, how much depends on your whole debt to income. It depends on your debt to income ratio and your whole profile, right? Like what else is on your profile. So if you don't have so one way to counteract that is by getting more credit cards, okay, before you end up paying off that loan. And so that can help to offset the drop that happens when you pay off a loan, okay? And so again, I'm just telling you something brief, but these are all things, right, to know. And one thing I love about business credit, it's like, I'm from New York. People say New Yorkers don't drive. That's not true. A lot of New Yorkers do drive. But I'm from Manhattan where I don't need a car, and having a car is a pain in the ass. I mean, I do drive my mother's car when I'm in New York all the time to do stuff, to go to Yonkers or go to Brooklyn, whatever. But the commitment to having a car in especially in the part of New York I live in, because it's not like that in every borough, but I'm from Manhattan, from Harlem, from Washington Heights. You could look for a parking space for an hour in the daytime. Too stressful for me, right? Got to move the car in the morning, alternate side of street parking. So now I live in Chicago, and I live in a neighborhood in Chicago where I don't need a car. And I purposely did that. I didn't want to be someplace where I needed a car because I look at cars as liabilities. I'm like, that shit is just more bills. Every time something goes wrong, you got to pay hundreds of dollars. I'd rather spend my money traveling, okay? And a lot of times, finding parking in Manhattan is nuts. So especially uptown where I live, where it's heavily Dominican. Spanish-speaking people love cars. So So yeah, I don't like spending money on things that don't make me money. So, and I'd rather spend money traveling than spending money on this damn car. And then a lot of times I'd be out of town. Like before COVID, I was gone a lot more than I was here. So, whatchamacallit? So yeah, so now, but the thing is with Chicago, there's a train system here, but it's not like New York. So I'm not going to take the train. Like a lot of my friends live on the south side. I live in the north side. I'm not taking the train to the south side. If I'm going to the south side, it's going to be in a car, you know, and there's certain places that I can move around better, you know, so I'm like, all right. So I'm going to get a car under my business name because I'm going to then put that car on, you know, Turo and other car apps and rent the car out. If I'm out of town and I'm going out of town for 2 weeks, somebody can rent this car, let the car make money. And the car can make enough money to pay the car notes and the bills in the car. Because I don't even drive every day. Like, I really don't. In the neighborhood I live in Chicago, LA Fitness is walking distance. Whole Foods is walking distance. But there's a bus that stops right in front of my building, goes right in front of Whole Foods, goes right in front of the gym, can take me right downtown to the ice skating rink that I love to skate at so much. Like, I don't really need a car for my everyday life. You know what I'm saying? I live in a beautiful neighborhood. But sometimes I'm like, it would be good. Okay, so I'll get this car under my business name, so it's not going to be on my personal credit and then mess with my debt to income ratio, where if I decide I want to get a house in a couple years, now I have that issue, which I don't know that I will, but I'm just saying, right? Put it under my business name, and it actually is an asset, and it adds to my business credit profile, which then can help me get more money, because under my business, people see that, oh, this business has dealt with this loan. So that opens the business up to more lines of credit for other things. So if I decide I want to get another car under my business name to make money off of solely, then I can get that loan easily, because they see, because there's also business credit too. There's personal credit and there's business credit, and they don't work the same. Business credit, the more expensive shit you put on your profile, the more money it's going to open you up to. The personal side, they look at it like you're a risk, okay? So certain things are better to do under your business, but I also plan on making money off of it. I am going to it is going to be a part-time business. And if I decide that my other company wants to rent the car to go teach a workshop, then one of my companies can pay my other company to rent the car, report that line of credit to my other company, and that other company has a line of credit and showing of making payments. Right? This gets into the business credit thing. So there's a lot of things like ways to leverage your personal credit when you have good personal credit into business credit, protect your personal credit, and make money and leverage this business side, right? And you turn liabilities into assets. Okay? And then it's important, it's funny, because there's one woman who I also have learned a lot from, a woman named Credit Ninja. I like to give credit where it's due. And she said, how did you come into this so late? I feel the same way. That's why I'm talking about it and telling as many people as possible. Okay? Because I'm like, how come I didn't know this 10 years ago? It would have really helped my life. And that's why people I know who did know it and didn't say nothing to me, I'm side-eyeing them. Okay? But there's one woman, Credit Ninja, who I learned so much from as well. And she's also brilliant. And she said you have to be polygamous when it comes to the banks and these financial institutions. And it's true. And so what she means is, you know, you should, especially if you have a business, but even if you don't have a business, it's good to have different accounts, have a few different bank accounts with different banks. But with a business, for sure, okay? I have a few business bank accounts, okay? And who I open up, you know, what institutions I open up certain accounts with depends on what this business is doing, what kind of products this business might need. And this business is going to need car loans, because I've heard Navy Federal and Bank of America give really good auto loans. I'm definitely going to save this. You know, I save every live and I repost it on YouTube. So it's good to have relationships with a few different, you know, major banks, whether it's the Bank of America, the Chase, the Wells Fargo, you know, whatever. Then some credit unions. Credit unions are good to throw in the mix because they might have a different they might have a different purpose, you know, so it all depends on what kind of business you have and what you want to do with it. But regardless, it's good to have relationships with multiple institutions, because if one institution won't give you something, somebody else will. And also competitors like Chase. I used to bank with Chase. I had an issue with Chase a few years ago where they owed me a bunch of money, and they owed me a bunch of money, and they closed my account. Okay, they had overcharged me overdraft fees that they never should have charged me. I brought it to their attention. They paid me back. They sent me a check because they owe me money, and they closed my account and didn't tell me why. And they've so I have this weird issue with Chase. And normally I would say F them, but knowing what they have to offer, both personal and business, I'm like, nah, Chase is the top institution that I need to get back good with. So now I'm, over here playing it with Amex, because Amex and Chase compete with each other. And when Chase sees that you're all up in Amex's products and you have top Amex cards, that makes them jealous and want to play. It's kind of like when people say women want men who have attractive girlfriends. People say that, I'm not the type of chick that thinks like that. I like you. Like, I'm not going to go after somebody because he got a pretty girl. But I'm just saying, a lot of people say that. So it's kind of like that same type of thing. So you're playing these leveraging games, okay? And they want your money. They want your business. Oh, you're spending your money with Amex? We want you to spend it with us. So building your profile in that way. What's on your profile totally matters. And then major institutions, when you have a good limit with one major institution, the next major institution wants to match that. And a lot of times they'll give you more. So you don't want to just have a relationship with one bank. You want to have relationships with a few different banks, and you want to research that bank and see what they have to offer. And the more you learn about this, the more you understand this, okay? And so I'm just going to say that, having multiple relationships is important. That way you can leverage different things, understanding your products, understanding how important it is to have a good personal credit profile. And if you don't have it, it's not impossible to build one. So if you learned something from this video, please like it, please share it. Yeah, the whole relationship thing, like you don't want to see, like I said this in my other video, like nobody wants to date somebody who's been dating every dusty on the block, right? They don't have a lot of credibility. But then maybe if somebody was like, you look at somebody as being top tier, and they were with a top tier person, and now they're trying to, they're talking to you. It's kind of like, it's relationships. You gotta have relationships with the banks. And then if you're in business, you definitely want to have relationships with the business bankers. You want to go into the bank, you want to know them. You want to, whatever your company does, you get them a discount on something, a sample of something, so that when certain products come in that will help your business, they will think of you and they'll call you, and they're more likely to put your application through. Will give you funding for things. Or your business starts to grow, you go into that bank, talk with the business banker, let them see. That really helps. It's just the relationships that you have with the banks. Super important, okay? So I hope this video was helpful to somebody. I think I'm probably done with these credit conversations for a moment. I just had to get all this out. I've been a nerd about this. You were told get with credit unions. Yeah, Navy Federal is good. It just depends. I also have an account with Navy Federal, personal, and also going to open up a business one for one of my businesses. But Navy Federal's products aren't the best. It's okay, but it's like they give high limits on credit cards, but their credit cards aren't the most useful in terms of return, which I talk about that in my other video. But also, but I know Navy Federal has very good auto loans. You know what I'm saying? So it all depends on what somebody is trying to do. And having a relationship with Navy Federal is definitely not a bad thing. Navy Federal is one of the top credit unions. But you also want to have relationships with major banks too, especially if you're in business. Okay, so it all depends. Everybody needs different things. Everybody's doing different things. So it kind of depends on your own individual profile. But please, if you learned something from this video, like it, please share it. And make sure you follow me on IG and YouTube. And have a great day. Bye.